Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com speaks about crude's decline, interest rates, and gold. Rick Ackerman, editor of the newsletter Rick's Picks, comments on whether China and the U.S. will come to some sort of trade deal at the G20 meeting in Argentina. He tells us rising interest rates have taken a chunk out of the car business in the U.S. Checking in from Japan, James Corbett, founder of the Corbett Report, says Japan's aging and shrinking population is going to take a big chunk out of their economy. Nissan Motors also finds itself under a huge scandalous cloud. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and MGX Minerals President Jared Lazerson. We'll talk to Ross Clark right after this.
Vatic Ventures Corp is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you, Jim.
Oil has taken a pounding, and OPEC has a meeting to talk about it. When is it going to take place, and what do you think they're going to talk about?
Well, I mean, it's coming up in the next week, December the 6th, and everybody's wanting to do something in terms of curtailing production. Whether they can come to agreement is another thing altogether, but the objective here is to cut about 1.3 million barrels a day for the current production and try and stabilize the prices. Although prices really, they're down hard, from 76 down to 50. But they have stabilized in the last week or so. It's been 8 weeks of lower highs in terms of pricing. So, I mean, it's for all that it was talked about the number of lower closes there a few weeks ago and how oversold things were getting. If we look back in the oil market, and look at the weekly charts rather than the dailies, you find there's 17 times since the 1980s where oil has declined consistently for 7 weeks or more. And all but one of those ends up with a short-term rally off the oversold condition and then back down to retest or take out the lows. So for our work, the 35% decline was the anticipated amount, taking us down to $50, with it stabilizing a bit in here. If it does see a rally, we still think that that's going to be a selling opportunity for at least a retest of this and possibly below that. Now, for the producers, anybody in the drilling business, etc., it's been a pretty rough stretch. The tax selling pressure still seems to be with us at this point, and there might be, another 2 weeks or so left of that. But there are going to be some great bargains as we hit into that. From here through the second week of December. So I think that we'll definitely be putting a list out of some of the stocks that are into what we would call capitulation mode, and have a chance for at least a reprieve rally out of December into some point in January.
Are we expecting a Santa Claus bounce to the markets?
Well, yes, we got some really good oversold readings here a week ago. The NASDAQ and Russell 2000, which had been the ones that had really been clobbered, along with the high-tech stocks, we got some nice levels. The weekly on the NASDAQ, the NASDAQ 100, had 9 consecutive weeks with closes below 4 weeks earlier. So that type of sequential setup is very rare. We've got probably a dozen of those since the mid-1980s. And invariably what happens out of that, you get a solid reversal to the upside. You retrace at least 62% of the decline. And this week has seen the beginning of that. We've retraced now about just under 40% of it. There's probably more to go here over the next couple of weeks. And, optimally, you would look for an upward bias in the markets until we get into January. But I think as we move through the first quarter of next year, there's going to be a transition into out of this consolidation phase and into one that can end up taking out support. Now, one thing I am watching is the interest rates. Interest rates, we're seeing the 10-year yield back down to 3.01 or 3.02, having been up at the 3.25 level. If interest rates continue to ease off here, I think that's a sign that the economy is slowing, and stock market probably ends up rolling over and taking out its support levels as we move through, as I say, the earlier part of next year.
If the equity market's correct, are we going to see gold become more popular?
Well, what you need for the gold market is really a lack of confidence in the currency. That's really what it gets down to. And at this point, trend is still down. There's when looking at the COT numbers, commitment of traders, we're not seeing any extremes in there right now to cause a major rally. We usually during an equity market decline, if you break by 5% or more, it puts a bid into the gold market for a short period of time. And we did see that coming out of the last low, just a few weeks back when gold got that bid and took us up to the 1235 to 1240 range. But the resistance level that's in here right now is pretty significant. I'm watching a 150-day moving average on gold, which sits around 1238. And we might get up and test that, but unless it can break through that decisively, I'm still thinking that the trend is down, with a very good chance of still retesting the lows in the mid 1100s that we had earlier this year.
Ross, thank you so much for chatting with us.
Always good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Rick Ackerman, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always enjoy being aboard. Thanks for inviting me, Jim.
The U.S., Canada, and Mexico have signed the new North American Free Trade Agreement at the G20 meeting in Argentina. The U.S. markets reacted, I think, in a positive manner, but the Canadian stock market fell. Why the difference, do you think?
Oh, I usually see these events as unrelated to reality. You know, we have what's going on in the real world, and we have the market in a fog of indecision, fear, greed, and irrationality. So don't worry too much if you can't figure out what's going on there, Jim. I'm looking at the market now, and I put out in my own newsletter what I warranted as a 20-to-1 bet, and that was that we're going to get a trade deal with China over the weekend Trump is in Argentina and he's scheduled to have a one-on-one dinner with the Chinese president, and we're just I don't think the market has fully discounted that, but I think if we get to the end of the weekend and Trump is out bragging about the deal he did with China, you're going to see the Dow rise 1,000 points next week at least. So it's definitely a long shot bet because China has been hanging tough, and there's no reason to think that they're going to give much way. But still, if you can get good odds, 20 to 1 on what is a pass line bet for a trade deal, then why not, right?
Some people have suggested the best they'll do is a photo op and maybe some minor league deal, but of course it may be blown out of proportion.
Well, there's a big drum roll here, whatever happens. Trump already blew off Putin. They were supposed to get together too, but because of Russia's aggressive move on Ukraine, Trump has called that off. So really the only thing of substance happening with G20 is going to be this lovely little intimate dinner between our president and Mr. Xi. So again, it's not an odds-on bet that there's going to be a meeting of the minds, but you never know.
General Motors warned quite some time ago that its profit margin was being squeezed by the U.S. tariffs on steel and aluminum. Is that one of the reasons why they're moving their plants out of Canada and the U.S.?
For sure. I mean, they have to make money, and our president is acting like that shouldn't be a concern. Their major concern is to be a benevolent benefactor of their employees. So Trump is sometimes so completely out of tune with economic reality, and here he is threatening to take away GM's subsidies if GM doesn't keep its manufacturing or move its manufacturing to the U.S. or keep all its U.S. plant operating. So, which raises the question, in what way is the U.S. subsidizing GM? I'm sure you could make a case either way because, as we know, most subsidies are pretty well buried.
If there isn't any resolution on this tariff matter, can you see the trade war between China and the U.S. continuing?
For sure. I mean, this is probably the best opportunity we're going to have to straighten things out. And supposedly we've had some behind-the-scenes meetings between trade representatives at a lower level and even leakage of a little bit of optimism ahead of dinner. So in any case, if they can't get it together under these circumstances, and let's hope that the food is pretty good and the wine is good, but if they can't bring their heads together on this now, we better hunker down for a long winter.
Well, the president says he doesn't drink, so perhaps the Chinese president can enjoy all of it.
Yeah, he doesn't drink, but let me mention a friend of mine had a company that essentially built liquor brands on names. So they had a Willie Nelson bourbon, and they even had a Trump Scotch that was more. It was very elegantly bottled in some blown crystal from Eastern Europe. So it came in a spectacularly designed and engineered bottle. But of course, Trump says he never touches a drop, but he was not above endorsing a vodka in that case if it had a payback.
The U.S. Fed now strongly hinting that there's only one or two more interest rate hikes planned. What will that do to the U.S. dollar?
I'm amazed, that the market took off. The Dow took off for 600 points the other day on some blather from Jerome Powell, the Fed's latest blatherer in chief. What he said was, well, nobody knows what he said exactly, but if you try to figure it out, it sounded dovish on interest rates. But here was the market taking off. Whatever he said, we so completely knew what it was beforehand that the market can only be seen to have been primed to go anyway. Everybody knows, and I'm going to say this with the kind of cocksureness that invites getting slapped down, but we all knew that the Fed was probably or maybe going to tighten one last time, just to be perceived by all those Fed watchers as walking the walk. But this last, whatever they do, it's going to be the last tightening we're going to see. And we may even segue into QE4. I think it's 4 or 5. No, not 5. I think we'd be going into QE4. So if there's one of those optimistic semi-fantasies that the market, that Wall Street can attach itself to, it would be this idea that we're no longer in a tightening regimen. We're really looking forward to the first word that the Fed's going to start to loosen. So it almost puts a floor under the stock market.
Are mortgage rates in the U.S. actually falling because of the soft housing market right now?
You can't really depend on market forces to work their magic on mortgage rates. You know, nothing could be more susceptible of Fed manipulation than the cost of borrowing money to buy a home. So it's it's a bizarre market, and it's not going to respond in the usual way, you know, just because existing home sales have really died over the last 8 months. And although first-time buyers, because of the very high prices that homes have reached, are completely priced out of the market. So ordinarily they would have their effects on the banks, but the actual rate is going to take its good old time getting closer to something like equilibrium because of all the machinations in the background to manipulate rates. But the good news is that you know, the weakening stock market and all the weakness we see in the economy is going to put a cap on rates, so it's possible mortgage rates have peaked. But you know, the auto leasing business is on a different, a somewhat different time cycle, and the same things that have the rise in interest rates, mortgage rates on the 30-year to close to 5%, are hugely impacting the leasing market for cars.
How bad is it?
Well, it's pretty bad. You know, with the feedback loop on cars is killing the market for used cars, and it all sort of feeds on itself. As used car prices go down, you know, the sale of some of these rental fleets into the used car market is weakened, and it has a kind of a self-reinforcing effect. In housing, maybe not quite as much so, because it's a much more big ticket item than cars. You know, it's a big decision. So, you know, I'd say the long-term cycles in housing tend to be a little bit more rational, less volatile than what you would see in the auto leasing business. But it's going to take a long time to see housing uptick, especially with that really crucial component of it, namely first-time buyers.
We'll have more with Rick Ackerman when This Week in Money returns.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Ackerman. Rick, copper has been around $2.70 for quite some time. Is that an indicator of a slowing world economy?
For sure. Copper has always been a pretty good indicator of activity in real goods and things, you know, durable goods, heavy manufacturing, and certainly the use of power, telecommunication system, outbuild infrastructure. So copper has come down quite a bit. You know, back in June it was trading at as much as $3.55 a pound, basis the COMEX contract. And over the next couple of months, it took a tremendous slide all the way down to around $2.57. So since then, we've had what looks to me on a chart like a consolidation. So copper may have made a bottom, and I could even see a pretty good rally here up into the neighborhood of about $2.95 a pound. And if that's the case, it suggests that whatever softness we're seeing in the global economy, particularly in China, is going to so the things are going to turn around a bit.
Crude oil has taken a hammering over the past couple of months. Is it going to continue to slide?
Well, it's if copper's turning around, crude will too. But I would say there's no bottom on crude. You know, the main driver right now of a huge hit, big downtrend in crude, we're talking about from a high up near $77 at the beginning of October. We've come down in just 2 months to a recent low of below $50. So that is a gigantic hit, a 1/3 hit. And, you know, just looking at it, it's hard for me to see a bottom. If I'm looking in kind of an obvious place, I would take the low that occurred last June, around $46 a barrel, which is about $4.50 from where crude's trading now, as a good place to look for support.
Has OPEC lost its influence on oil prices?
Not completely. I think it's more a question of losing resolve. You know, the Saudis may have had their plans to tighten or loosen the supply, and at the margin they are really capable of moving the price quite a bit. However, you can see how geopolitics has interfered with that process, for one, or mainly because of this Khashoggi affair. You know, you might say that the Saudis are running a little bit scared. Initially, it seemed like the prince wanted to accommodate by freeing supplies so that people wouldn't be too upset with the killing of Khashoggi, but it hasn't worked. You know, you've got a couple of senators splitting off from Trump on that and just saying we really can't give the Saudis a free pass on this. And the issue of morality is playing out at the international level in a way that it seldom does.
Well, we had all those big companies that were supposed to go to a diversification conference in Saudi Arabia, and they bailed. Is that going to hurt?
Yeah, I mean, they're definitely in the geopolitical sense, they are like the country that has uttered the N-word, and you know they're being shunned all over the world right now, and it's hard to think, you know, to imagine what the practical consequences might be, because we know that Europe, for whatever its moral scruples, is eventually going to do business with any regime that feeds the euro economy.
We'll have more with Rick Ackerman right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Ackerman. Rick, will the FANGs survive the latest troubles on the stock market?
Yeah, they've got a mind, or perhaps a mindlessness of their own. You know, we saw this week some uncertainty there. You know, they've still come down. They've come down pretty hard, and I've been following Apple mainly. I think that if you get Apple right, you get the stock market right. And last week it did come down to a low within pennies of where I projected. 170.78 was my target. I think the eventual bottom was 170.26. So we've had a pretty good bounce in this last week off that low. And if it takes, then the whole market is kind of getting a green light. Every portfolio manager on earth has to own Apple, and that's where their bread is. That's the stock that butters their bread. So you really don't have to look any further. The stock's been as high as 180, which is 10 points above my target. So I think it looks to have put in a pretty good bottom. And you know, we've got now Apple and Amazon playing tag team here. There's enough institutional money to float one or the other at any given moment of any day.
Amazon said it had its best Cyber Monday ever. Will it continue to grow?
It will, but beyond anything we can imagine or estimate, you know, it's easy to make a case that Amazon will dominate the global retail scene at some point. But we all know, we know that, you know, companies that are out front with creative destruction, at some point falter because they attract competition. Even a giant like Amazon has competitors, such as Walmart, and we've seen, Walmart do pretty well in transitioning from brick and mortars to a pretty robust, market, online. So Walmart is not exactly sitting still, and I think it's healthy that they compete so well with Amazon. So Amazon has come down really hard. You could argue that what we saw last week was the completion or near completion of a head and shoulders bearish formation. But on the other hand, if you want to extend the head and shoulders idea, Amazon, currently trading just below 1,700, could come down to more like 1,100 to 1,200 to complete the pattern.
Tesla, will it crash and burn?
Only when the sleazeballs who manipulate Tesla for a living want to accumulate shares at lower prices. Tesla is the most opportune stock of any that I think has ever traded in human history, as far as the way the masters of the universe move that stock up and down based on news. And initially their carnival game was not really that sophisticated. They would simply put out a picture online of a Tesla sitting alongside a highway in flames. You know, this was the infamous battery problem. But if you correlate each one of the really negative stories, even most recently the one where Elon Musk had supposedly gone off the deep end, you see that they're all hoaxes. All the stories are frauds, because as grim as things looked just a month ago, you know, Musk was going to get a huge fine and they were going to take him out of commission. You could see Tesla going to 100. They were still building the sedan and tents and unable to meet demand. Things look so grim. And there's the stock trading at 250. Just a month later, it rocketed to 366, and it looks like it's going to take I'm not sure about another leg up, because that would mean it's headed to new all-time highs. But the stock is still capable of buoyancy up here. It's not, and so any big move you see in Tesla is being driven by absolutely deft manipulation of the news.
Bitcoin's been hammered. Is it an indication that cryptocurrencies are on their way out, or at least almost?
Well, I've had for a year, a long, long time, a 43.96 target on Bitcoin, and I know one of the supposed world experts on Bitcoin, Novograd, was saying, "Hey, buy here," and over the last few months, that was with Bitcoin around 6,300, and I put out a not even a yellow warning flag. I hung out the red flag here and said you got to be out of your mind to buy Bitcoin at 6,300. So it has since fallen to around 3,500. This is basis the symbol BRTI, and I have to say I was fooled too, because I thought it was going to give us a really good bottom at about $4,400 per BRTI share, and the fall below it to me is ominous. You know, it suggests that maybe there is no bottom. If you had to connect up that idea, no bottom, with some fundamental real-world coordinate, it would be the fact that the Bitcoin, the blockchain, is not sufficient to shut out Russian hackers. And so that there are real security problems with Bitcoin to the extent that it's sort of trading off the original blockchain. So Bitcoin may need to regroup, or let's say not Bitcoin, but cryptocurrencies may need to regroup after getting wiped out here so that they can be reincarnated in a more secure form.
In an effort to clean their air, a lot of countries are now turning to atomic power. Is uranium going to pick up even further?
Yeah, I've been seeing some really persuasive bullish touts on uranium, Kamiko in particular. You know, that's a good play on uranium, and more based not on so much the the likelihood that the whole world is going to start building nuclear plants, but that supply and demand have gotten a little out of whack, and that the power companies that do buy uranium they've gotten a little too used to soft prices. But even with a little bit of tightness in uranium supply, it can have a pretty bullish effect on prices.
With Jeff Sessions out as Attorney General, is there a good shot that marijuana at some point is going to be legal federally in the U.S.?
No more than there has been for the last 50 years. You know, I can remember Lenny Bruce, this would have been in the early 60s, he was saying back then that marijuana would have to be legalized, and he was talking about within the next 10 or 15 years, because all of his lawyer friends smoked dope. And his idea was that they were all going to become congressmen, and marijuana would that would grease the path for legalization. But we've seen that the process has really been fraught, and we've had an attorney general in Sessions who was very resistant to just letting marijuana be legalized willy-nilly. So they kind of had not a double standard, but they had they were saying the federal government is still in charge, and we're going to get right down on your case if you don't enforce your own local laws. And I know a little bit about that because I lived in Boulder for 19 years until about a year and a half ago, and I saw the marijuana legalization process close up and in slow motion. And what happened was the federal government came in, and they essentially made the locals, Boulder, enforce the local laws, which in one instance said that if you can't put your marijuana store within X number of yards of a church or a school. So what happened was that in Boulder, all of the stores that violated that rule had to shut down. So, but the government didn't go overboard there. They simply came in and said, look, you've got these laws on the books, and we're all right with it as long as you enforce them. So the government, I guess they've been as reasonable as they could be in enforcing laws that are still on the books at the federal level, so as not to, step on the toes of state and local jurisdictions.
Yes, and we have the unusual situation where pot is legal in Canada and it's legal in Washington state, but you can't go across the international border with it.
Well, that's a funny thing about borders. I can tell you from experience that the airports simply don't care. You can fly in and out of Boulder Airport with a suitcase full of marijuana. I'm not suggesting this, mind you, but to the extent that I've seen the process, I would say that the authorities at this federal facility in Colorado, or let's say quasi-federal operation, namely Denver International Airport, it has its own it enforces laws in such a way as to say, look, we just don't want to be bothered with the marijuana thing as long as you don't go overboard. It's coming, and whether maybe a little more slowly with respect to transporting marijuana over international borders.
Is the beverage aspect of THC going to be the next big wave?
There's so many forms of marijuana. I would say beverage consumption, in a way, is sort of like the vapes that they're trying to outlaw now. The vape, it can be so addictive that they're passing laws that say, hey, you can't flavor it in a way that entices the kids. So marijuana in beverage form is going to come up against the same hurdle, namely that they'll be telling the manufacturers, hey, look, you can't make it quite that appealing, quite that tasty. So I think beverages are going to have a bit of a problem, because once the active ingredient finds its way into something like Coca-Cola, or these days into some sports drink or electrolyte replenishing drink, it's going to be a while before it gets to that level. In Boulder and other places where recreational marijuana has come pretty far along, you get marijuana in candied form, in the form of little jelly babies and things like that. But the corresponding rationale for that fits that respects the law is that in those jelly beans or chewy things, you can get a pretty precise dose of marijuana. So that's really the advantage of the chewables.
Rick, thank you so much for being on This Week in Money.
Always a great pleasure, Jim. Thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Coming up from Japan, James Corbett, next on This Week in Money.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett, publisher of the Corbett Report and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. And James, I'm proud to announce that your hometown Calgary Stampeders defeated Ottawa to win the Grey Cup.
Yay! If only they'd done more of that in my youth when I was really following them closely. But hey, I'll take it. Why not?
James, President Trump and President Xi of China will be huddling up over dinner today. What kind of deal do you think they might come up with, if any kind of trade deal at all?
I am not holding my breath for a trade deal on a type of meeting like this. I am sure they will obviously be talking trade, but I am not expecting that Trump and Xi will personally come to some sort of understanding at this little huddle meeting that will ultimately solve this. A lot of people are talking about the possibility of this kicking off a decades-long trade war, and although I'm not convinced that that is necessarily the case, I certainly don't think this is going to be wrapped up and we're going to have any sort of agreement here. Now, I'd love to be proven wrong. Maybe this will all be some great political theatrics that will play well to Trump and his base, so they might be motivated to make some sort of deal like this. But Again, I'm not holding my breath for any sort of major breakthroughs on the Bring trade war because there's a lot to it, and I think it's a moving target at this point. And the crosshairs are, in fact, actually once again falling on Japan, amongst other places, as talk is now brewing once again of that 25% car tariff that Trump has floated in the past for car imports as a way of giving GM a kick in the rear end as they talk about idle some of their plants. So again, I'm not expecting a lot from this latest meeting, but it'll be interesting to see what nuggets come out of it and whether that gives us a bellwether as to which direction this trade war might be heading in.
Well, cars, we're hearing that Trump might put tariffs on European imports. And the thing is, with GM closing down plants in Canada and the U.S. and moving production to Mexico, what good would tariffs on foreign cars do if the production's gone to Mexico?
Well, the idea here is apparently, according to a Trump tweet, so take it for what it's worth, but the idea is that more cars will be built here in the United States, and GM will not be closing their plants in Ohio, Michigan, and Maryland because, well, if they produce them internally, then there will not be the 25% tariff. Therefore, their internally produced cars will be more competitive on that market. So that, I think, is the theory behind this. As to whether this is how it eventuates, or even if this 25% tariff will actually be laid, that's still up in the air. But Japan, for its part, is taking it seriously. And at a September summit, so a couple of months ago now, we did have Japanese Prime Minister Shinzo Abe talking with Trump, and Trump apparently promised that he would not raise automobile tariffs at that time, at least while they were in those talks. So we'll see. Again, this might just be more bluffing and bluster as a way of just trying to give sort of a kick up the rear end GM.
Is it true Honda builds more cars in the U.S. than it does in Japan?
I'd have to check the statistics on that, but it wouldn't necessarily surprise me if that is true. Certainly, their export business is an exceptionally important part of their trade, and the U.S. at any rate is just numerically a larger market than the internal Japanese market. So again, I'd have to check the numbers, but that could very well be true.
You think the Americans are worried that the Chinese yuan is being used for more and more transactions instead of the U.S. dollar?
I think this has to play into the bigger picture of this trade war and trade disputes with China generally, because ultimately I think this is where the long-term changeover in the global economy is happening. Is it in bilateral trade deals and other multilateral trade deals that don't involve the U.S. that are operating in local currencies and in yuan itself? And the yuan is becoming more of an accepted currency for payments in a number of deals. It's still not really, it's certainly not a reserve currency, and it's not a mainstream currency for settlement, precisely because of all the capital controls that Beijing places on money moving in and out of China, which makes essentially the yuan is not a very liquid currency at this point in the international markets. There have been attempts at liberalization and a little bit here and there. Until that spigot is really let loose, I don't think we're going to see the yuan overtaking the dollar anytime soon. But I think, again, the longer-term vision, certainly for Xi and for many of his trading partners, is ultimately to make the yuan into a viable alternative to the dollar and the dollar's hegemony over a global market, which it's really enjoyed since the end of the Second World War.
Is Asia enjoying lower oil prices, or are they concerned on an investment side with lower oil?
Well, it certainly does benefit the oil import heavy markets here. Obviously, much of the Asian economy does rely on imported oil, certainly here in Japan. And as we talked about before, there was India just a few months ago talking about forming an oil buyers club to try to combat the OPEC cartel and this sort of thing to try to keep prices down. So for a lot of businesses, the direct immediate effect is that lower prices are good for the economy, as it just equates to lower expense for a lot of businesses. Now, we'll have to see ultimately how much of a deal this translates into, but apparently LNG prices, at any rate in Asia, are plunging at the moment. So that, I think, is overall a boost to the Asian economy. Again, heavily energy import dependent.
Well, BC's going ahead with its $40 billion LNG plant in Kitimat, and it looks like they've just made a $1.1 billion settlement with the First Nations people in Squamish to go ahead with the LNG plant there. South Korea is building 140 new LNG super tankers. Does this mean that a lot of BC gas is going to be powering up things in Japan and China?
It certainly could, and one would assume that would be a ready and welcome market for a lot of that gas, and I think that's a trading relationship that could certainly be fostered. It depends, obviously, on the overall trading relationship and how that settles out in this age of the overarching age of the Trump trade wars and however that eventuates. But it certainly is a major possibility, and I don't think you can go wrong with trying to set up an economic lifeline, as it were, to Asia, the growing Asian markets that are, as I say, heavily dependent on that imported gas. It's a win-win, one would assume, depending, again, how that trade relationship is maneuvered.
The Green Party of BC is opposed to shipping out LNG, saying it's just another polluting fossil fuel. But won't it be replacing coal-fired plants, which, of course, are the worst polluters out there?
Well, that's right. And, of course, China has been building coal-fired plants like there's no tomorrow recently. So one would assume that the LNG would be a slightly better alternative from that perspective. But at any rate, yes, to the extent that LNG offsets use of coal, it would potentially be a boon, or at least a net, not as much of a net detriment to the environment overall. So I think there is that angle to it. But, of course, I think the idea of the Green Party and many others is that this will all be replaced somehow by solar energy and wind and tidal and whatever else renewable energy, which, of course, is not a viable option for the current, at the moment, energy needs of developed economies.
We'll have more with James Corbett when This Week in Money returns.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're chatting with James Corbett. He's reporting to us from Japan. James, Nissan Motors is facing a huge scandal. What's the story there?
It's a fascinating and strange story involving Carlos Ghosn, who's the chairman of Nissan, who, to put this in perspective, for people who don't know, Nissan is part of a global car-making alliance with Mitsubishi Motors here in Japan and France's Renault. And together, those three car makers are responsible for 1 out of every 9 cars that are sold in the world. So this is a pretty important position in a pretty important company. And the Nissan chairman, Carlos Ghosn, was recently arrested in Japan after an internal investigation in Nissan revealed, quote, significant acts of misconduct over many years, end quote, by him and another executive. And we're getting bits and pieces of this out through the daily news. And the latest is that Carlos Ghosn has apparently amassed more than $80 million in IOUs for Nissan in some sort of compensation package that he was working on, basically trying to structure it so that the income wouldn't be reported as income that he was receiving right now. It would somehow be deferred off into the future and for tax and legal purposes. And his defense so far is apparently saying, well, I thought all of this was legal. So we'll see how far that goes up against the notoriously difficult Japanese justice system, which moves, incredibly ponderously and inexorably towards its goal generally of prosecuting successfully prosecuting whoever comes up on charges. It will be very interesting to see how that happens for Carlos Ghosn personally. But in terms of Nissan, generally, it's a very interesting phenomenon. As one would expect, stocks did drop 6% on the first day after the news broke, and the hedge funds started shorting the stock, as one could imagine, expecting something like a 15% downside in the first couple of days. That did not happen. After that initial 6% drop in Nissan stocks, they actually made some of that back, and in fact are now not too much down on where they were before this scandal broke, which has got a lot of people scratching their heads. The only explanation that I've seen for this that makes any sort of sense is that, Nissan was actually never that great of an investment, an institutional investment anyway, because of obvious corporate governance problems. And some of the corporate downside was baked into that cake. So a lot of the institutional investors have been avoiding the stock in the first place, so they're not shorting, or they don't have much to unload right now. That's at least the explanation that's going around. But for whatever reason, this apparently hasn't greatly affected Nissan shares up to this point. But we'll have to see again how the legal process plays out with Ghosn, and whether this results in actual conviction, and how that might play into the share price of Nissan.
Well, so often when the boss goes away, a company goes on, and really, they don't make day-to-day decisions. Is Nissan and its consortium a well-run company?
I don't know about the internal governance of Nissan, but there are those who say that the governance structure has been notoriously not that great, has not instilled inspiration in institutional interest in the stock. So for that reason, there has been a lot of purchasing of the stock. But yeah, I don't get the impression that Carlos Ghosn was like the Steve Jobs of Nissan, that he's the irreplaceable spark plug of ingenuity in the whole structure. So perhaps this will be one of those changeovers that happen imperceptibly to the general public. But I guess again that remains to be seen.
We'll have more with James Corbett on This Week in Money right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners, and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett in Japan. James, is Japan's population slowly withering away?
Yes, it is. And we have a lot of different ways of getting a handle on that, one of which is from recent International Monetary Fund report, which just this week came out to say that Japan's gross domestic product could fall by over 25% in the next 40 years as a direct result of its declining population. So, as people may or may not know, Japan now is actually a shrinking society, shrinking population. For, I believe, the last couple of years, the population's actually shrunk in absolute terms as the oldest population on the planet continues to get older. And basically, there are not very many young people coming along to take their place. Japan is not the only country in this demographic position, but it seems to be kind of the wind vane that's telling us which way this demographic wind is blowing for a lot of developed countries. And so Japan is now feverishly working on various ways to try to stimulate that economy and try to avoid that 25% decline in GDP. One of which came out in an interview with Prime Minister Abe this week, in which he declared that he was looking into ways to essentially raise the retirement age here in Japan. The retirement age here being 65, but he is floating an idea of basically increasing pension payments for those who defer those payments until the age of 70, making 70 the kind of de facto retirement age. We'll see, again, how that passes in terms of legislation, but it's at least an idea that's being thrown out there right now. And this is also playing out in another pretty fundamental change to the Japanese economy, which has been famously quite guarded from, not just from outside competition, but really from the possibility of outside workers coming into the country to take the blue-collar job shortfall, which the country is experiencing because, I think in part, because of this demographic crunch of fewer young people coming into the system. Japan's unemployment rate is actually at an all-time low. There's 2% unemployment, or not all-time low, but it's been lowest in 25 years. So very, very low unemployment rates means there is a shortage in labor market here. And to make up for that, and as part, I think, of combating this overall population decline, Japan is floating the idea of thinking about a foreign work bill that's going to basically loosen up some of those immigration controls and make the country a little bit more open to foreign job seekers. There is technically the ability for blue-collar workers to come over here as unskilled foreign workers since 1993, in fact, but only on very strict terms. They can only work for one employer. They're only allowed as trainees, and they're typically only allowed to stay for up to 3 years in the country. Basically, they're looking at liberalizing those rules so that foreign workers will be able to come and at least have a pathway towards permanent residency. So we'll see, again, whether this results in a flood of new unskilled labor coming into the country. But I think that is part of how the Japanese government is reacting to this demographic crunch. Anything new in the Kobe steel scandal? It has been a long time since that has been in the news here, so I can't say about any of the latest developments in terms of the legal developments in that scandal. But I do note with some interest, I was watching a YouTube man on the street type of interview of some Japanese locals who were talking about the news in Japan and how it's reported and what they were thinking. And someone mentioned the Kobe steel scandal as an example of something that they think goes on quite a bit in the Japanese economy, but Kobe Steel, for whatever reason, got in the crosshairs of the media and law enforcement, and so they bore the brunt of it. And this man on the street, was expressing sympathy for Kobe Steel because, well, everyone does that kind of fudging. So that might be a bit of an insight into the fact that maybe this is not such an uncommon practice in Japan. It's just that they were the ones who got caught pulling the bag. Is Fukushima still melting away? Well, the cores are still there. The core of the problem remains, to use that pun, and that is not going to change anytime in the near future because, again, as has been the ongoing concern and problem since the disaster happened, the technology really doesn't yet even exist to approach the cores, let alone start removing them. And they are, as always, I just saw a few days ago, they're hyping the next round of robots they're going to be using to apparently look for the fuel and try to identify it and partition it and whatever. But still, they haven't really solved the problem of how they're going to remove this. And that's a decades-long problem that's going to remain there and is going to remain a problem. And as I have contended for some time, will continue to contend, I am sure that any very bad news about Fukushima or about the full scale of how long it's going to take to really try to clean up that site or at least truly seal it off is going to be delayed until after the 2020 Olympics. I think the Japanese government is quite invested, quite literally at this point, given their partial ownership of TEPCO, is quite invested in the idea of keeping bad news out of the spotlight until, of course, the big travel brouhaha dies down and the tourists die down after the 2020 Olympics. Well, let's hope that they don't decide to use Kobe steel to encase it. Good point. James, thank you so much for chatting with us. Thank you for having me on. It's a pleasure to be here. My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. And that wraps up our show for this week. We'd like to thank our guests,
Ross Clark, Rick Ackerman, and James Corbett. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and MGX Minerals President Jared Lazerson. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, a lot of talk about lithium batteries and recycling. What's new?
Well, you're starting to see more news on the batteries themselves and EV cars and now recycling. So that excites me. And one article that I was reading was an article commenting on the EV car market, and that was the Dutch Royal Shell, the gas, the oil company, and they were very positive in what they had to say about lithium-ion batteries and the future of EV cars. So, to me, that is a real endorsement from a company that is being challenged on the sale of oil. So they've come up with a lot of different things that really should warm our hearts. And one is that so far there's been about, from their statistics, there's been about 3.5 million cars, EV cars that have been produced. And by the end of this year, they expect that number to be close to 5 million. And eventually, like in Bloomberg says, it'll be up to 40 million by 2040. That in itself tells you that we're in a very rapid growth industry, that people, when they look at our projects, they have to realize that we were trying to dot every I and cross every T, so we can cover everything off in our patent applications that, that would require us having a niche in this market. Do I think there's going to be other recyclers doing certain amounts of recoveries and everything in the next 10 years? Yes, of course. It's a huge market, but I think that we'll have the total solution answer, which is cradle to grave, and that in itself is something that we are working hard to protect our investors with. We're advancing new technologies, and that takes time and effort and money. So, I'm thinking that next year is going to be a banner year for us. So far we've gotten good response on our private placement. We should be able to announce a tranche closing next week, and it's moving along. It's not easy. We've had markets that are, just tearing everything apart. And, November's been a real rough month. Let's hope that December's Santa Claus shows up and starts to, even out the markets for us. Hopefully, Trump's meeting in China tomorrow will have positive effects in the market next week. So these are things that we watch closely, and we're optimistic. We think that we've got the answer. We know we have the answer. There's no conflicting technologies out there. There's only so many ways you can run for example, if you're running a copper plant, concentrator plant, there's technology that's been known for
over 100 years. It's incorporated in that plant. There's new technologies, new chemistries, and everything else that have been developed. And so when we look at ours and we look at the chemistries that we're working with and the metallurgical results that we've had, then you can't be anything but happy, Jim. I mean, it's telling us that we have a solution in hand, and that the market's going to be looking for. You know, we got other things that are happening out there, like a gigafactory that's being built in China that's going to be 50 times larger than Elon Musk's. That's going to put a tremendous strain on the battery metals, which will result in increased prices in those metals. And, they're trying to bring cobalt down to its lowest level, and they've managed to do that. And but it's still, there's a lot of value in cobalt in the batteries that are being used. And nickel, we'll start to see, next year should be seeing new highs. Manganese should be seeing new highs. Lithium should be seeing new highs. To us, it looks like, next year is our breakout year. And when you stop and think about it, it's only been 2.5 years that we've been working on this process. It came from an idea to resulting in that idea being proven out. And now our pilot plant, which will start up this next month, probably towards mid-month, will basically put us on an even footing. And of course, we got our patents. That we've answered everything back. The last time you could have answered it in a paragraph, and that we see that coming around the corner very quickly. So, and we have other things on in the oven that could happen. I think next year is going to be the result-driven year for AMY, and I think our shareholders are going to be very happy about that. So, having a oil company come out and basically saying that EV cars are going to dominate the scenario over the next few decades is something. I imagine that these oil companies are starting to look around for participation in alternate fuels rather than just oil, and that gives us a bigger audience to play to. So I think we're going to have a great weekend here, and I think next month we're going to have a straightening out in the market, and the next year will be the year for AMY.
Larry, where are you traded?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Germany under the Frankfurt Exchange under the symbol 2AM. And you can always find all the data that the company has published on our website at AmericanManganeseInc.com. You can contact me on my email at LREAUGH@AMYMN.com. Or you can phone and talk to somebody here at the office, including myself, at 778-574-4444. And that's pretty much will give you a good sketch of what the company's doing.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on November 30th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jared Lazerson. He's the president and CEO of MGX Minerals. Welcome back to the show, Jared.
Hey, Jim. How are you?
Jared, the last time we talked, you were looking at some major financing. Did that go through?
We just announced a financing up to $8 million on, I guess it was Friday. It's now Tuesday, so we just closed today I guess it was yesterday, but we just closed just under half of that. $3.2 million is closed, and we're working away on the rest and expect that to close probably next week.
And from there, where do you go?
Well, we've got a lot of drilling activity underway. We're drilling in Argentina right now on a lithium property, excellent property, the other side of the lagoon from a former Corbett property, currently owned by LSC Lithium. The Corbett property, historical, very good grade, above 1,000 ppm lithium. That's underway. That project's been moving really fast. We've just mobilized and drills to our project in Chile. So we're really moving on the lithium front. We also have a lot of activity in BC. We're getting a lot of results in, positive ones. They haven't been released yet, so I'll just leave it at that. We haven't really talked about our BC properties, but, the great thing about raising, a good amount of money, is that, you can get out there and do a lot of things. So one of the things we've done is lean into kind of our backbone experience, which is, BC mining, really where the company came from. And, like I said, we've got some exciting results coming up. I just can't say those will come out in the next, week or 10 days here. And then, we expect to be drilling again. Like I said, the results are looking good. So, we'll be back in, drilling in BC. This time next week, we may have as many as 5 drills turning, globally. And then again, with the capital that we've been able to raise this year, and, it looks like once again, here in December, we're buying equipment, wastewater treatment, systems. We can add our lithium extraction systems to those systems for a petrolithium combination, or those systems can go to South America, should we get good results. So, a lot going on, and a lot more going on behind the scenes. We're really limited in what we can say about projects in progress, but we've spent a lot of energy and time on advertising and marketing of our wastewater systems, of our mineral extraction systems, and that's generated a just massive pipeline of deals and deal flow. And that's really, I think, going to be the story of 2019 is revenue, deal flow, joint ventures, and we hope big results from really all of our projects. Some were in joint ventures, like with Power Metals at Case Lake Lithium, fantastic project out there. They've already drilled 97 holes as of the summer. I believe they're up to about 127 now. That'll move to resource estimate. We're a smaller partner on that, but we're just have a tremendous amount going on. And fortunately, it all seems to actually be going quite well. The risk always is that when you get involved in a lot of things, that you start to get reduced marginal returns. But somehow we're able to do it. The last piece I'd add, in just terms of having a good amount of capital invested over the last year, and when I talk about a good amount, it's last 12 months we've raised $25 million. We're looking to raise another almost $10 million here. We bought Tech Resources battery division, Zinc Nickel Solutions. This is a low-cost mass storage battery. It looks like we really hit the nail on the head with this one. We're now in an analysis not just to act as a kind of small off-grid battery, solar kind of battery deal, or backup for cell towers or even hospitals. We're now really looking at going head-to-head with Tesla on mass storage. They've put out 2 big batteries in Australia, I think in the 50 megawatt range. We've been analyzing this very closely. We believe that we can really knock it out of the park, that it's not even close in terms of capital costs. Our cost of storage, which is not the output, but really the megawatt hours of storage, is vastly cheaper. We have a fuel tank. It contains zinc potassium electrolyte. Very low cost to add more zinc potassium electrolyte. We can have small size like a gas tank, but we can literally go fuel storage tank size. And that literally correlates to the number of megawatt hours or even gigawatt hours that we can store. So while lithium is linear, as in 50 megawatt hours, 50 megawatts of output, zinc, because of the nature of it, you have a fuel cell and you basically have a charged zinc electrolyte, which essentially acts as the fuel. We can go as big as you want. It's environmental. It was a kind of small idea, a small company with a lot of great technology, 20 issued patents. And now we're starting to see that, if you really, take the top off, and I've taken over as CEO of that company, and I'm not patting myself on the back, but again, with capital and know-how and, a little bit of business acumen in terms of M&A, now we could have a really, energy storage, but now really a energy arbitrage and energy trading company where we're buying power at night, very cheaply, and we're selling it back during the day. But we're not really limited in storage. We can store as much as possible, 1 gigawatt hour with 100 megawatt hours of output. We're starting to put it together, but I think that's going to be another massive story. And that company is doing an IPO equivalent spin-off. We're targeting February, realistically, probably March. So again, the real story is invest a lot of capital, raise a lot of money wisely, and the markets are fickle these days, unforgiving in terms of timing and deliveries and delays. But ultimately, I think our long-term investors will be greatly rewarded with MGX. It's just been not a struggle year, but it's been a lot of hard work this year. But you plant the seeds, and 6 months later, a year later, year and a half later, it's amazing the results.
Jared, where are you traded?
We're traded on the CSE under the symbol XMG, and on the OTC under the symbol MGX-MF, and as well we trade in Germany, in Frankfurt, under 1MG.
How can people get more information about MGX?
Best place is the website. We put out a lot of press releases. They're all there. That's really the key is really following us. You can get on the mailing list there. It's www.mgxminerals.com as well. Our renewables company, our battery company, mgxrenewables.com for information on our battery mass storage company.
Jared, thanks a lot.
Thanks so much, Jim.
I've been speaking with Jared Lazerson, President and CEO of MGX Minerals. I'm Jim Goddard. Our conversation took place on November 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.